This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower now. Much of the weakness we are seeing currently is due to the energy prices coming under some pressure, with crude oil now over $2 lower. However, in the overnight trade, we did see some good gains. This due to ideas that the European Central Bank, at their meeting this Thursday, will announce a new quantitative easing program. Could be as much as 550 billion euros. Also, there was some strength in the overnight trade after the IMF upgraded the outlook for U.S. economic growth this year. But once again, traders centering on the energy markets with some pressure a bit more recently. However, we are feeling that this pressure that we are seeing will probably not follow through. I think we can see a move back to higher on the day in the indices today. Longer term, still looks like a new wave of central bank accommodation is going to support stock index futures well into this year. Over in the currencies, we are seeing a little strength in the euro currency. This seems to be linked to news that consumer confidence in Germany came in better than expected. However, gains are likely to be limited by the anticipation of a large-scale QE from the ECB to be announced later this week. Also, over in the Australian dollar, some pressure, even though we did have news that China's GDP came in better than expected in the fourth quarter of last year, coming in up 7.3%. The guess was 7.2%. And of course, the fate of the Australian dollar very much linked to the economic situation in China, since a good portion of what Australia exports goes to China. Also, the yen a little bit lower, with the Chinese news somewhat bearish on the yen, causing flight to quality longs to be liquidated there. However, we do have the ongoing Greek problems with an election coming up on the 25th. This could cause some trouble to the Eurozone, some possibilities that that Greece could leave the Eurozone. That seems a bit far-fetched, but that is a fear at this point. So the flight to quality influence, I think, is not over for the yen. However, once the Greek situation settles down, I think we can see the downtrend resuming for the Japanese yen. And interest rate markets, very good gains, almost a full point higher in the 30-year bonds. This anticipated QE from the ECB, very much a factor supporting treasuries. So from here, I would look for additional strength at the long end of the curve, especially for the 30-year bonds. And this is a trend that is likely to continue well into this year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.